What is going on today, guys? In this video, we're going to be talking about how hedge funds and institutions may be crashing the stock market as we currently speak. Now that this reverse repo data did come to light, I do think you can start to connect the dots and see what is going on behind the surface. So I don't think this is a bad thing for AMC. I'm going to say that right off the bat. I think if you are on the bullish side of AMC and all these other meme stocks, that is probably a great side to be on. It could even be seen as a bit of a hedge towards a market collapse. So we're going to be talking about everything you guys need to know, use data, give you guys my personal opinions. Keep in mind, I'm not a financial advisor. Anything can happen in the stock market, and it is literally a coin flip. But I do think when you connect the dots, it does make a lot of sense. So we're going to go over all of that information. The only thing that I do ask is that you tap, tickle, touch, or smash the like button, as well as comment down below and subscribe to the channel. I would love to hear from you guys on this exact topic, as well as check out the link down below to get free stocks in public and Weeble. Literally public, no need to deposit any money, no need to link a bank account, and you get your stock immediately. No money down. It's not like Weeble, you have to deposit $100, but if you want to do that, link down below in the description, as well as if you want to be a part of my buy and sell alerts with the whole community sourcing great information, make sure to check that out. Link down below in the description. It literally pays for itself. But first thing I want to talk about is this reverse repo data that did come to light for the ape community today. We are at a record high of $547 billion, and let me tell you guys why this is so important, and this is like the icing on the cake, because I've made videos about this before, but since this data has come out, it is literally, like I said, icing on the cake. We have never been this high, guys. You see this when you have lack of liquidity and people need cash, and this is a short-term thing, usually even overnight, 12 24 hours to up to about 15 days. Now we are at a record high. We have never been this high. As you can see, the last time we were this high, well, not this high, but last time we were very high was during the crash of 2020. So this is a huge red flag that people need cash and they are getting ready for something, probably all the margin calls they are going to experience with AMC. But once you mix this with the margin debt that is outstanding, even looking at Archegos, which we'll take a look at what happened with that if you aren't aware, they were severely over levered. But we are at a record high for margin debt. We have literally never been this high for margin debt. Even in October 2020, we were only at $659.31 billion in margin debt. Keep in mind, most of this is held by institutions and hedge funds. And then now we are at $847.19 billion. This could be the tipping point with this margin. If stocks start to go down, this could be the biggest catalyst we have ever seen. We've never seen margin debt this high that could drag the stock market down. And something else I do want to point out about the AMC short squeeze, that money that they are putting up, these hedge funds and institutions have to sell stock to come up with that cash. In most cases, that is probably why you see the reverse repo right now, because they would rather get money from the Fed or get a short-term loan from the Fed instead of sell all their stocks, right? The market does seem very bullish. We are at all-time highs right now, but if we do see that huge squeeze this upcoming week, like I do think, and I think we could go to about $100, that's just my opinion. Don't take anything of what I'm saying seriously about that. Some people get mad I even put a price target on it, but that's my personal price target. Come to whatever conclusion you want. I really don't care. But we are here to talk about how this could crash the stock market. And once you mix these two factors, the fact, and even this reverse repo is just huge, guys. Some of you guys might not understand the significance of this, but it is essentially the Fed giving out money. These people still have to pay this back, the hedge funds and institutions, especially if stuff does go haywire with AMC and these meme stocks in this next upcoming week. It could be very bloody for the stock market. Like I said, the margin debt is at all-time highs, so that'll be a huge catalyst to the downside. A lot of people flooding to get out of this margin debt if we do start to see that downward turn. Now, if you just take a look at the S&P 500, we are due for a correction. We are due for a 10 to 15% correction if you just look at this on a technical basis. I mean, I don't really like to look at the RSI or anything like that, the MACD, none of that when it does come to the S&P 500. You can kind of see that we are overdue for a correction. We are literally at all-time highs as we speak. Well, we're about 30 cents off all-time highs. which is basically all-time highs, right? But if we do break under that $415 level, which would be the moving average, the 50-day moving average, then we could definitely see a lot of pain. We have been riding this, and that'll be a negative downside factor that I will be watching for this $415 level. But overall, if you just take a look at it, we are due for a correction of some sort. We have went up way too high, way too fast off of inflated money. Quite frankly, money that shouldn't be in the system. Arguably, who am I to say that money shouldn't be in the system? I like money. Give me all the money, right? But some of the valuations and justifications of valuations don't make sense at a lot of these companies, and some of these companies are just quite frankly zombie companies and can hardly even meet their debt obligations. Now, when you tie this all into what happened with Archegos, take a look at this. Listen to this. Archegos is an indication of over leverage, believes Aidan Garib, head of global macro strategy and research at Pavilion Global Markets. If the largest prime lenders are lending to this firm at a 8-to-1 leverage ratio, you can be sure that they've done the same to others. So an 8-to-1 ratio, if you have margin, not crypto is non-marginable, at least on Robinhood that I'm aware of. I don't think it's marginable anywhere. But if you had, let's say, $2,000 in your account and you had a margin account, you could only spend up to $2,000 of your account in additional margin. So us retail investors, we can only go 1-to-1 on margin. So we are not the issue here, guys. It is the hedge funds and institutions, like in the case of Archegos, 8-to-1 leverage. So if you had $2,000 in your account, they literally gave them $16,000 in margin. That is absolutely asinine. Why would you do that? But there's such a lack of regulation, and people just collateralize margin on top of margin, right? So this is happening on a large scale extent. We can see this from the margin data. We can see this from the reverse repos. It could get bloody, guys. I just want to give you guys this heads up. I'm really not trying to convince you of anything. I just want this information to be available to you guys. The last time we've seen a spike like this in the near term or the short term history, right, since 2020 was the crash of 2020. So this can be a telltale sign right here. Even since June 1st, like I pointed out in other videos, we have went up about 100 billion in money that the Fed has loaned out to hedge funds and institutions. So the dates directly correlate. I do think this is a huge problem, and I would rather people be aware than not aware. And you guys can make a lot of money off this. This is not doom and gloom. I hope a crash comes, and I don't hope anybody loses money or is depressed or anything like that, because you can make a lot of money during a crash. If you follow any of my videos, especially in the past, you would know how to do this, buying puts on the S&P 500 or any of the high levered, the UVXY or anything like that. You can make a ton of money. SPXS, I believe, is another one too. You can make a stupid amount of money if you know how to trade this. So this is not to cause fear, FUD about the market, none of that. So please don't comment any of that unless you have something to add to this. Maybe I am missing that would turn your head into more of a bullish tone about the information that I've provided. It's not, like I said, it's not a FUD thing. I just want you guys to be educated, and there is a strong possibility here this could happen, as well as a strong likelihood you would make money off this. I am going to make money on this if it happens, so I think everybody should have this information. So that is going to wrap up this video. Those are the 3 things that I am looking at. I'm going to watch the situation very, very closely, especially if we do start to see some downside on the SPY, especially around that $415 level. It could get quite bloody. So with that being said, I will see you guys later. Take care.